Hello, everybody. Just want to give, a quick Q2 portfolio update and just give some quick thoughts on the portfolio. My last portfolio, my total portfolio value was around like 350,000, and today it's 500,000. So in the last 3 months, that means I have had my portfolio increased by about 150,000, which is pretty crazy. It's also insane to hit the $500,000 mark. I'm 31, so basically I'm like, if I can do 15% compounded annually, that means by the time I'm 50, I'll be like worth, I don't even know, I guess almost like $10 million. So it's a bit surreal. But I have a long way to go, and 15% annually is hard. And I don't know if my portfolio kind of performance like this will stick. So yeah. So the big thing I sold out of my portfolio is I sold out of HIMS. I think it's probably like the biggest positional change. I also kind of sold out of VersaBank. I have like some calls here that are going to probably go to zero, but whatever. But Yeah, I sold a HIMS. I sold like half right before Q2 earnings, and then I sold the other half right after Q2 earnings. And I'm just so glad to be done with the company, man. It's just like there's too much drama, there's too much going on, there's too much noise, and I just realized like I just don't want to own a position where like every other like week some news comes out and the stock drops like 5-10%. Will HIMS do well from here? Like probably, but if either way, I'm honestly pretty okay. The other big change I think is I bought Reddit, and then I've also recently had a new position, Duolingo, which I guess I'll talk about as well. So I bought Reddit at $100. I've done 100% gain already on this one, which I'm pretty happy about. The crazy thing about like Reddit and when I was buying it is it was just clear to me that Reddit really didn't have to deliver much over the next year to like very quickly go, to become cheap, right? So today it's like their forward EP is 121. It's because they had such a strong Q2, and it was like so obvious to me that their 4P was like 60 or something when it was at $100 a share, which actually, you look at the math right here. If you divide this by two, go down to $100 a share, it really was like 60. So when I saw it right, I had like a 4P of 60. It was just kind of like a no brainer for me. And I just, obvious to me, they had long term room for growth. So I sniped right at 100. I got really, kind of fortunate opportunity came up, and I'm just going to hold it for life. At least for now, I just feel like there's so much upside here, and yeah, I think it's very hard to buy companies of this quality. Hood, I'm up, give it on the day, almost 400% on, which is insane. I think Hood valuation is starting to get like kind of stretched here, but I'm just not really willing to sell. I think, when I look at Hood, I'm like $100 billion market cap. I don't think it's like that insane. I think they can justify this market cap, maybe not this year, maybe not next year, but over the long term for sure. And, with crypto and with banking, with their gold card, it seems to me that they kind of deserve these ratios. And it's just kind of a company I've kind of committed to just holding for life. So yeah, Sezzle, man, this is a bit of a rough one. I rode this one up to 180, and I didn't sell a single share. And I don't know whether or not we'll regret it. I think we'll see like at the end of the year. Maybe I should have trimmed some at 180, but I didn't think it was like insane valuation at 140. And now like Sezzle is just ridiculously cheap again. With Sezzle, they actually did 8 million in advertising last quarter. So how are these results still not here, man? It's so annoying. So if they hadn't actually done that 8 million in advertising, they'd be on track to do like 140 million in earnings annualized. So when you have a $3,000 balance sheet, or market cap, sorry, that's 20 times earnings. Is basically what Sezzle is trading at today. It's like 20 times earnings effectively. If they didn't do that advertising, right? And they're trading forward earnings of 20. So I think there's like a clear overreaction here. I bought a bunch more in my personal account, and I bought up my retirement accounts. So I betting a pretty big significant of my net worth on Sezzle. And it's just like I cannot find other massive dislocations like this in the market. They still did 75% year-over-year growth. They're trading at 30 times earnings. They're clear secular tailwinds for the business. It's just obviously cheap to me here. And I think Sezzle, I don't know if they'll get back to 180 this year, or next year, but I do think they will get back to like at least the 120, so not the 130, 140. So I'm a happy holder here. There's a lot of other things I like about Sezzle, like, I like it's founder led. They're scrappy, whatever. You get the point. Melly is a long term hold I've had. It's something I'll continue to hold for long term. I own some of my retirement account as well. I barely even pay attention to the earnings reports. This is one of those positions that like you just set it and forget it. That's kind of why it's here. So Duolingo is a new position for me, and there's so much shit about Duolingo. But I just want to kind of quickly go through kind of this. So I might just make a video on this honestly. But Duolingo did $45 million in earnings this quarter, okay? And if you go back and you look at their expenses, right, it's up about 30 million year over year, 40 million year over year because they've been investing so much back into the business. So they could be a lot more profitable, basically, is what I'm saying, if they wanted to. If you're at 45 million times in earnings, you have $1 billion of cash on the balance sheet, so you have $14 billion enterprise value, right? That puts you at 140 million, so it's like 15,000 divided by, 180. 80 times earnings, basically, right? And sorry, it should be 14,000. So Duolingo's trading at like under 80 times earnings right now, effectively, right? And this is a business that just grew 40% year over year. It's going to continue to grow. I don't know if it'll do 40% year, but I think high 20% for the next year or two is definitely within the realm of possibility. I'm really interested to see how chess plays out in some of these new subjects. So I'm going to make another video. There's too much to say here, but basically I think Duolingo's got like not even headwinds, just short-term noise. And I think it's one of those companies that will be like very clearly kind of cheap in the long run. This was, let's see, it ran up like right after earnings and then it basically just crashed because of some chat GBT demonstration, whatever. Brookfield. I hold a lot of this in my retirement accounts as well as here, so I'm not really willing to add anymore because I'm like, I just hold so much, and I like Brookfield. I like it in my portfolio. It's a steady compounder, but I do really prefer smaller companies with high upside. So, Hood is a $100 billion company, but it was like 20 when I bought it. Reddit was like 20 when I bought it. Sezzle, Palomar are in the single digit billions. Duolingo is $15 billion today, So Mercado Libre is like one of the biggest companies I've ever bought, and it was just because I'm like, I see the 10x upside from here because LATAM's a big continent. Will Melly 10x? I don't know, but you get the point. And then kind of the last couple positions here. So Gig Cloud Technology is a position I hold for a while. I actually just trimmed half of this position, mostly because I'm going to owe a bunch of taxes, and I needed cash, and I need to pay those now, and I didn't want to sell anything else. Also because, I don't know, I just feel like the management drives me a little insane on this one because they don't buy back shares, and I was pretty unhappy they didn't buy back more shares last quarter, and I'm like, I just don't want to constantly have to like wait 3-6 months or a year for management to like wake up and buy back shares and drive the price up. So in general, I still think Gig Cloud Technology is like fairly priced here. I think they can definitely get to 40. I'm excited to see how Noble House turns out. This position's fine, yada, yada, yada. I bought one Figma at IPO. I'm just going to hold this because if you sell it, you get banned from trading IPOs. I'm also kind of hopeful if I just never sell this, if Robinhood might be more likely to allocate me shares in the future. So we'll see. I own two other positions. I own Bank of Georgia. That is really right. And then I own this company called Tasmea, which is like an Australian company. Bank of Georgia, I've done very well on. I bought it like 3.5 times earnings, just growing 15-20% annually. And at this point, I'm just like not going to sell, honestly, probably just ever. No matter what happens, because it's like 6.5 times earnings. Like every time I think about selling, I'm like, it's still like not really expensive here. It's like there's clear tailwinds to the Georgian economy. They're not trading at really that expensive multiples. They buy back shares, they pay a dividend, and yeah, it's just every time, like even if you got to 10 times earnings, well, you're growing 15% annually. It's not hard to justify that valuation. So I think for me, when I look at Georgia long term, Bank of Georgia long term, it's just something I'm going to hold on to. Maybe trim if it gets too big because there is some like geopolitical risk, but something I'm very happy to hold. Tasmea is a very interesting company. I don't really have time to go into it, but they're an Australian small cap, and they're growing quite nicely. And they're trading at forward earnings of like 12 and trading at 24 times earnings. So I don't know. Looking at this right now, I'm like kind of wondering if I should be buying more, to be honest. But yeah, very interesting small cap that has great growth and a great future potential growth. So yeah, in general, just thoughts. It's a little bit surreal to me to have 100% year-over-year gains, basically, which is what I did. My starting balance was like 225,000. So yeah, it's about 100% year over year from this time last year. And I started doing really, really well in the market when I started buying like kind of higher growth companies, and those opportunities came up, and I moved away from, I don't know, I didn't really know what I was doing the first few months of investing. So my first big wins were with like Hims and Robinhood were probably some of my big ones. And then, hitting Reddit is like such a big hit, Sezzle as well. I think I will probably continue to outperform the market. And I feel like, I don't know, will I get 20-30% annualized? It's so hard to say because you need a certain level of opportunity, and It's like when the market's getting kind of frothy, like right now, it helps your returns, but it lowers the kind of opportunity in the market. So it's a bit of a mixed bag. But do I think I can do 15 to 20% annually? I think so. So I think I'm tracking pretty well. I'm happy with my progress. Just gonna keep working hard, keep working at it. I'm actually very busy right now, just going through a ton of stocks and going through the market because even though the market's getting expensive, there are lots of areas in the market that like don't make sense. Like Duolingo, I feel like should be a little better priced here. But then I also see something like Adobe, which it's not really my kind of investment. I don't really buy companies that are $150 billion, but it's just like they're going to grow 50% annually here. They've sold off quite heavily. It doesn't really make sense to me. So I don't know. Maybe I'll take a swing here. And we saw, Kava sell off recently here. Maybe they've recovered today. I don't know. Yeah, Kava sold off quite a bit recently here. I would love Kava at like 4 billion market cap. 8 billion is a little pricey for me. But, that's an interesting sell off. Monday.com is an interesting sell off. So even though the market's expensive, I need to go through all these, really understand these businesses. No idea if I'll buy them, but yeah, kind of get up to date with what's going on with them. So yeah, it's kind of where I'm at with the portfolio today. Pretty solid earnings. The only thing that honestly kind of sucked is I got absolutely hammered on Sezzle. I'm trying to like show this graph. Man, they need to do a better job on this. But it's like I went from 430 down to 400 here, and basically that entire swing was, $40,000 worth of Sezzle. So I've actually have had a $60,000 total swing in Sezzle because this position was at 180 and went back towards not right at 90. So it's like it was double what it is basically today. So essentially, I could have $60,000 more if I had sold the position. And then if I had, I round trip Palomar as well, so I could have another like 10 or 15,000 there as well. So I could be almost at 600K, but it's okay. I'm not going to be too hard on myself. In general, like I'm pretty proud of my results. And yeah, I'm going to keep grinding, keep working at it. And I way overachieved what I ever thought I would get in the market my first year. So I think I'll just take that win. And yeah, thanks for watching.